It was a pretty strong week for all the housing numbers. New supply and sales numbers keep climbing weekly and compared to last year. Price numbers had a slight increase this week across the board. As the data comes in each week this year, I've been more optimistic about home sales volume growth than for home price growth this year. In specific, when inventory is 25% greater than a year ago, the supply demand balance is obviously very different than it has been. This implies future softness for sales prices. So while we can see the current sales prices of homes holding up, the signals for the end of 2024 and into 2025 seem like we're heading for flat home prices. In addition, we can see price reductions ticking up this week. It's not a scary level, but people are buying homes, but it is notably softer on pricing than last year at this time. I like to point out that consumers are more sensitive to changes in rates than to the absolute levels. And since rates are now basically unchanged for the month, just easing down from the early March peak of 7.2%, sellers and buyers are tiptoeing back into the market. As a result, we continue to see the signals that home sales volume will grow this year and prices will be mostly flat. Price appreciation signals last year were stronger than they are now. And that's what we're watching for. At Altos Research, we track every home for sale in the country every week. The market changes too quickly to wait a month for the latest data. We track all the pricing, all the supply and demand, all the sales, all the changes in that data so that you can understand it immediately as it happens. I'm Mike Simonsen. I'm the president of Altos Research, and let's look at the details of the U.S. real estate market as we approach the end of March 2024. Available inventory of homes, unsold homes on the market continued its climb for the spring season this week. There are now 513,000 single-family homes unsold on the market. That's 1.1% more than last week and 24% more than a year ago. Last year, inventory was still declining in March. Now it's on the rise. In this chart, each line is a year of available inventory. These are homes on the market unsold. Notice the light red line from 2 years ago. Exactly at this moment, that's rates started skyrocketing, and so did inventory. So see that trajectory for this year, the dark line is heading up, and see how quickly inventory rose 2 years ago. So the gap is narrowing. Three takeaways from the inventory data right now. One, growing inventory this year means that more sales can happen. More sellers means more sales. Two, year-over-year inventory growth points to weaker demand and is one of the signals that home prices won't climb this year. We currently have 24% more homes on the market than a year ago. Three, the longer rates stay higher, the more inventory will grow back to the old levels, closer to the old levels. If you're a home buyer and you're waiting for mortgage rates to fall before you swoop in for a deal, recognize that lower rates, even slightly lower, like 6.5%, will spur demand more than supply, so inventory will start falling and selection and competition will be worse, unfortunately. Each week this spring, we've been tracking the new listings volume. We want to know how many sellers are coming into this market. We want to know if there will continue to be more sellers than last year. We want to know if that rate is growing too quickly. If a truly bearish scenario for home prices were to emerge, one element is that we'd see this supply growth much faster than demand. On the other hand, last year we had very few sellers. So that was one reason why we had so few sales. We were supply constrained. So we're watching the new listings count each week now. We want to see growth in this number. More sellers means a more healthy housing market. We want more selection. We want greater supply to help combat that affordability crisis we've created in this country. And what do we see? So this week we saw just over 60,000 new listings add to inventory, with another 17,000 new listings that are immediate sales already in contract. In total, that's 14% more than last year. 14% more sellers definitely means more sales can happen in April than closed in April of last year when we were so supply constrained. In this chart, each line is a year. See how the dark line for this year keeps growing over 2023. This seems like all good news to me. There are not a lot of sellers, so there's a very little chance of supply and demand imbalance, but there are slowly, steadily more sales each week, more sellers each week. The gray lines are years past, and a year with 5.5 million to 6 million home sales would probably need 80,000 new listings of single family homes right now, and we had 60,000. So there simply aren't enough homes for sale to hit those big sales numbers, but the lid is being lifted. We can see obvious growth. And as supply increases, the rate of sales is starting to pick up compared to a year ago. We can measure home sales in real time by tracking all the homes that moved into the contract pending status this week. Those pendings aren't yet sold. They'll spend 30 to 40 days in contract, and the sales will mostly close in April or May. And there were 67,000 new contracts for single family homes this week compared to only 62,000 in the same week last year. There were another 15,000 condos that went into contract this week. So this annualizes out to only like 4.3 million home sales without doing any seasonal adjustment. So obviously the rate of sales is still pretty slow, which makes sense given higher mortgage rates. But the rate of sales is climbing. More sales versus last week, more sales than a year ago. The rate of new contracts is 8% greater than a year ago. It's still 15% fewer than March of 22, but that was a time when buyers were still desperately trying to get their deals done as rates were rising. At the far left end of this chart, you can see how the contracts for 2024 started higher than the previous year. And at that time, in early January, I was optimistic about home sales growth for the year. That's the very left end of the chart. The dark line there is this year's line. Then in January, February, March, mortgage rates rose pretty substantially, and that sales rate definitely slowed. So we're in a pattern now, though, that looks to me like it's finally going to stick. It looks like April will see decent home sales over 2023. It won't overtake 2022 volume probably till after July of this year. July of 22 was when supply and demand fell precipitously. If mortgage rates stay stabilized in the upper sixes, for example, these trends look durable to me. Keep in mind that we can see the April sales data now, and those headlines won't be visible for several months from the traditional sources. So April is looking good for home sales growth. We've been looking so far at the cautious price indicators in the data, but in fact, this week, all the current price measures actually had pretty healthy gains this week. So when we look at all the homes on the market, the median price is now $439,000. That's up a fraction this week, and just a little bit, like 1.1%, 1.2% higher than last year. Home prices climbed this time of year in June to peak in June, and then that's when the best inventory, the most new listings, all the best demand is in the market. So this week's price increase is right in the normal range for the end of March. The price of the new listings took actually a little healthy jump this week, up 1% to $424,900. That's nearly 4% higher than a year ago. It is also to be expected that the price of the new listings each week in the spring lurch higher. There's no signal for big home price changes in this leading indicator, though. But it's nice that it moves up. So 4 years ago, in March of 2020, we were at the start of the pandemic lockdown period, and we could see the price of the new listings was dropping very quickly. Right now, 4 years ago. That price decline lasted only 3 weeks, though. And so the price of the new listings was one of the most important factors that showed us how quickly there would be no housing crash as a result of the crisis. 3 weeks. In this chart, we can see the slope at the far right end of the chart chart is not super steep. So we can see that prices are climbing for the spring, but they're not climbing quickly. And that's another signal about how we're slowing price appreciation over last year. The price of the homes going into contract across the country is holding up as well, and also not accelerating. The median price of the new contracts this week was $389,900. That's up a fraction from last week. It's also 4% more than a year ago. Home prices peaked in May of 22 and didn't surpass that during last year's spring session. So I expect we'll, hit all-time highs for home sales prices in the next month or two, assuming these current trends hold. So most of the signals in the data this week are actually pretty optimistic. If there's one factor to temper that optimism, it's price reductions. The percent of homes on the market with price cuts from their original list price ticked up to 31.4% this week. There are more homes on the market now that have felt the need to reduce asking prices than there were a year ago. Last year's market strength in Q1 and Q2 led to 5% home price growth for the full year of 2023. And we have less strength in the pricing numbers now than we did a year ago. And so while price reductions are now in the normal range, they are higher than any March in years. In fact, a decade. There are more sellers now who have reduced their asking prices on the homes than like I said, in any March in over a decade. This last decade was a very strong one for home buyer demand. And so we haven't really seen normal market conditions in a very long time. But this is a signal to pay attention to. It's hard to see how home prices nationally will grow this year under these circumstances. But we can see buyers in the market, but there's no signal of them pushing prices higher. So sellers who overprice are being forced to reduce. When we look at the price reductions chart, the line for 2024 has turned the corner and started climbing. Compare this year's dark line to, for example, 2 years ago when the market was really turning. At that time in March 22, there were still very few overall price reductions, but it was changing rapidly. So the slope of that light red line started to climb very quickly, especially in April and May of that year. 2022 peaked with 43% of the homes on the market needing price cuts. That November peak corresponded to home sales price declines 4 to 6 months later. And that's why this data is so worth watching so closely. These price cuts tell us about demand now, which turns into sales several months down the road. We can see how home buyers are very sensitive to mortgage rate moves. We can see the price reductions data adjust exactly in the moments that mortgage rates jump higher. So that's why we do this housing data work each week. The market is trying to grow, but home buyers are obviously very sensitive to the cost of money. Buyers and sellers don't necessarily see beyond that, though. And if you need to help buyers and sellers see the actual data, you should join us at Altos. Go to altosresearch.com, book a free consult with our team. We'll help you know how to talk about the market with your local market, with your clients and prospects today. There's a link in the description below to join us. Click that and let's get started.